Welcome to the Stocks channel. My name is Cory and welcome to your daily stock market update. First up, we're going to take a look at the SP 500 and we are looking at the SPY ETF. And we have a lot to cover tonight, so let's go ahead and crack open this chart and see what's going on in the stock market today. All right. So with today's price action on the S&P 500, we see we did go up 0.4% today, but it was another very volatile day because we were at one point trading above the 5 EMA right around that $346 level. Now we can see we obviously did not close up in that range and we came all the way back down to the open price and closed right around that 13 EMA. So we're still maintaining that short-term bullish trend because that 5 EMA is still trading above the 13 EMA. And that shows you how overextended we did get on this ride up, where we've now been selling off for 4 to 5 days and we're still in that short-term bullish trend. So when we get such a strong bullish trend, we can afford a cool-off period and we can afford a pullback that lasts this long because the bulls have time to cool off and still have a lot of room to go before we get to these support levels. So as you can see, we did find support right around that 0.382 Fibonacci retracement level of $341 because we did get that confirmation bounce today. So that is a good sign for the bulls that we did bounce off of that level and we're now trading very close to price action levels that are bringing us back to that 13 EMA. So if we can continue this momentum going into tomorrow and we could get another price action close above the 5 EMA, and we can break this red resistance trend line, we could start back up towards our price target levels of $350 and $355. Now it is possible we're in a small Elliott wave period where we've gone up in one wave, corrected in a quick wave 2, gone up to our wave 3, and this could be that ABC correction wave 4 before we go back up into a wave 5. And I'm expecting wave 5 to at least go back into our critical resistance level, which is that magenta resistance trend line up here, right around a price target on SPY of about $355. So it is possible that we're ending wave 4 and going into wave 5, but it is also possible that wave 3 is a continuation of the current pattern and we could see price targets even higher. But that's not likely to be the case because we know how strong this resistance trend line is going to be, and it's more than likely going to be an extension of wave 5 into that resistance level before we see further correction in the stock market. However, everything could change and we could see a break through that level and we could see an extension of wave 3 and then go into a wave 4, and wave 5 could end up extending much higher. So we need to watch the Elliott wave analysis very closely, but right now, either way you look at it, whether we're extending into wave 3 or going into a wave 5, we're still expecting to see more upside to the price right now. So I'll go ahead and delete the Elliott wave off of the chart, and you can see it's going to be a critical sign that we're going into wave 5 if we can break this resistance trend line. So if we break that level tomorrow, that is a price target of right around 347 to close above that line. And if it takes another day or two, that does decrease each day and it goes down about 50 cents to $1 per day at the current slope that it's going at. So it looks like the bulls are definitely back because we did see a lot of buying today, even though we did see selling going into the close. And if we go to a 1 hour chart, you can see that the last 3 hours of the trading day were all selling and we got red candles on each hour. So overall, it's still an update and it's still a win for the bulls because we held up above this very important support level and we're still trading above that 20 simple moving average. So if you look at the 20 simple moving average, you can see that it's still positive sloping and the 50 EMA is also still positive sloping. So we still do have a short-term bullish trend and a medium-term bullish trend, which means the trend is our friend and that is in the upward direction. So when the trend is on our side and we can identify that the trend is strong to the bull side, which it is, we still want to be buyers off of these support levels. So that's why we saw buyers enter the market today, because that $341 level was a very important support level and all of the trends are bullish. Now, if we start to see the 5 EMA cross below that 13 EMA, that will be our first early indication that the short-term bull trend is starting to turn into a short-term bear trend. But we have not seen that crossover. Therefore, we have to remain bullish because the trend is still bullish and there's no reason to try to go against the trend. Going against the trend is a dangerous game to play and you're more than likely going to lose more trades than you win when you're not trading with the trend. So you can see this cool off is completely normal and it actually gave time for the bulls to cool down and it cooled off the relative strength index, which means that we're no longer overbought and the bulls can start stepping back in and driving this market higher. So with the price action close and the trends that we have, I still have to give benefit of the doubt to the bulls, and I still have my eyes set to these upside price targets of $350 and $355. It's very likely that we're going to get one more test of those resistance levels right around those trend lines, and it's still possible that we could break through those levels and continue higher. But as we know, history says that that resistance level is very strong, and we typically get rejected at that level. So you can see there was nothing crazy with the volume today. We actually had less volume than we did the last 2 days, and we did go up on lower volume, which is completely normal. We know we like to take the stairs up and usually the elevator down, so we're going to go up on lighter volume, and if we start seeing heavy selling on higher volume, then we'll know there's likely to be a shift in this trend, and we're probably going to go back into a bear trend. But that's just complete guessing, because right now we have to trade with what's in front of us, and we're trading with a bullish trend and not so bad price action, still closing above that 20 simple moving average. So there's still more support levels below us. We still have the 20 simple moving average, and we still have the 50 EMA, and we still have a support trend line. So when we zoom out and you can see this trend line, if we can stay above that green line, you can see that that green line is definitely sloping upward, and we could continue to trend higher. So today was a step in the right direction for the bulls, and we finally did get a bounce after selling off for these 5 days in a row. And it only takes a little bit of momentum to get this bullish trend back in high gear and start climbing back higher. Next up, let's go ahead and take a look at the Nasdaq 100, and we're looking at the QQQ ETF. And we see the Nasdaq 100 has very similar price action, closing right about at the 13 EMA. And we see that we also did have a higher price target above the 5 EMA intraday before selling off and coming back to the open price. Now we did close up 0.21%, so an up day is still a win for the bulls. And we also do have this resistance trend line that we'll monitor, because if we can break back above that level right around $290, that will break this downward trend that we're currently in, and it'll snap the price action being bearish, because the only thing that's even slightly bearish right now is the price action. You can see the trends are very strong to the bull side because the 5 EMA is still above all the moving averages, and you can see how positive sloping that 20 simple moving average is. So we're going to give benefit of the doubt to the bulls, because we still have the momentum on the bull side and the trend is still trending upward. Now you can see on the Nasdaq 100, we're trading right around the 0.382 Fibonacci retracement, right around that $283 level. So that support level is holding up, and we are seeing buyers step in at that level, and we have yet to close below that price target. So I'm still looking for the bulls to come back into the Nasdaq 100 and start buying this dip very soon, which brings us to our price targets of 296. And then if we break 296, we have our previous all-time high test at $302. You can also see down here, there was nothing abnormal about the volume on the Nasdaq 100 today, and we're not seeing heavy volume on selling. So there's really no big money dumping their positions, and we know that the big money moves this market, and if they're not selling, the market is not likely to continue to go lower. So next up, let's check in on the Dow Jones Industrial, and this is the DIA ETF that we're looking at, and we see the Dow Jones also closing right around its 13 EMA and still in the bullish trending. So all three indices are looking very similar, and we're still holding up on the short-term bull trend as well as that medium-term bull trend. So the trend is still bullish on all three indices, so we look to our upside price targets. And on the Dow Jones, that is going to be a price target of $288. And if we could break the resistance trend line at $291, our next price target is up here at $292. Industrials are by far looking the strongest, and we'll get into that more when we look at the sectors in tonight's episode. Before we get into the sectors, let's check in on the VIX, which is our fear indicator. And we see that volatility is still in this market because the VIX is still trading at 29.4. So the VIX did peak up just a little bit today. And the VIX going up on a market update is not exactly what we want to see, because that shows there's still fear in the market. And typically speaking, when the VIX goes higher, we want to see the market go lower, which we did not see that today. So there still is a little bit of underlying risk in this market with the VIX being above 29. But we can also see here that the VIX is not breaking above this resistance level. So if the VIX can't break above 29.6, we can still go higher on an elevated VIX, and the market can continue to grind higher day by day. Unless the VIX starts spiking and really closing above this resistance level, we're not likely to see huge selling. Now, if you look at the trend on the VIX, the trend is absolutely starting to pick up on bullish momentum, because you can see that the 5 EMA is starting to break out above the 13 EMA and create some separation. And now all of the moving averages are stacked to the bullish momentum side. So we have the 5 above the 13 and the 13 above the 20 and the 20 above the 50. We're starting to see a bullish trend pick up in the VIX. but we really need to see the price action follow the trend, and we need to see that price action close above this 29.6 resistance level. So if you're managing your risk in this market, you really want to watch the VIX and see if the VIX is going to creep up above this level. If the VIX does close above 29.6, I would get very defensive and I would set tight stop losses, because as we know, when the VIX gets into the 30s, we could see huge 4 to 5% sell-offs in one day. So I would manage your risk and keep an eye on the VIX, because we know if the VIX continues to go higher from this level, we could see some drastic selling, and it can happen very quickly. Now the opposite is also true. If we see the VIX hit resistance and start coming back to 23.5, we're going to expect to see the stock market continue to grind higher on lower fear. So the VIX is a very important indicator to be watching right now, and we're looking at a level between 23.5 and 29.6. So now let's go ahead and check in on the sectors and see what's really driving the stock market. And the first sector we're going to take a look at is the financial sector. So we see the financials did close above the 13 EMA, but just below the 5 EMA, and we still have that short-term bull trend. So right now we're going with the trend, and we're going to see if financials can come out and break to a new daily higher high and start trending upward. If the financials can maintain this bullish strength, we could see the S&P 500 continue to go higher as well. You can see that the 20 simple moving average is starting to slope upward, and it looks like it could be crossing the 50 EMA very soon if we continue to get good price action closes on the financials. Next up is the industrials, and we see the industrials by far looking the most bullish of all, closing up 0.52% today. But more importantly, maintaining its bullish price action, closing above the 5 EMA yet again. So you can see the industrials did not have that 4 to 5 day sell-off that the rest of the market had, and industrials are continuing to creep higher and higher, and we see it's a very bullish trend, because you can see how far apart all of these moving averages are, and all of the moving averages creating that separation is showing that we have a very strong bullish momentum trend in the industrials right now. You can also see we did go higher on higher volume today, and yesterday we went lower on lower volume. So there's not a lot of people selling industrials, and there's more net buyers on industrials, which is only going to mean we're going to see higher and higher prices. So the industrials are looking very bullish, and as we know, the industrials could help drive the S&P 500 to new higher highs. Next up is the healthcare sector, and we see the healthcare sector also gaining some bullish momentum, because we see the 20 simple moving average has now crossed above the 50 EMA. We still have slightly bearish price action, but we are still trading above the 20 simple moving average, and the 5 EMA is still trading above the 13 EMA, so we still have that short-term bullish trend. So on healthcare, we need to start seeing a bounce soon, but the trend is still gaining momentum, even though we're cooling off and selling off for a few days here. So as you can see, all of the sectors are still in a bullish trend, and the industrials are even having bullish price action on top of the bullish trend. So it doesn't look like the stock market wants to sell off. It looks like this is still just a correction to the bull's move, and we're going to continue to see higher prices soon. Next up is the US dollar, and we're looking at DXY, and we see US dollar also going down minus 0.37% today. And this is another day that we see the dollar going lower and the stock market going higher. So we're back to that inverse relationship, and we're going to continue to monitor the dollar and maintain that relationship for as long as we can see it. Now, if the dollar continues to weaken, that means we expect to see the stock market continue to go higher. And right now, the dollar is looking bearish, and it is looking like we're getting lower highs and lower lows. So if the dollar can come out here and take out this low and close even lower, we'll know the dollar bear trend is picking up momentum, and we would expect to see the weakness in the dollar cause the stock market to maintain into a bullish trend. Next up is gold, and we still see gold tightly consolidating in our wedge here, and we're still waiting and watching to see if gold's going to break resistance and bounce off of support, and then we would want to be a buyer of gold here. But the reason we're waiting is because it's equally likely that gold could break out to the downside, and we just want to be patient and wait and watch a little bit longer to see if gold's going to break to the upside, where we would like to be a buyer off of support, or if it's going to break to the downside, we'll wait for the next support level to be a buyer. Next up is Apple, which is our market moving stock, and we see Apple's price action still holding up above that 20 simple moving average, and we're still maintaining that bullish trend because we still have the 5 EMA trading above the 13 EMA. So as long as we continue to see a bounce off of the 20 simple moving average, our price targets on Apple remain at $127 and $130 if we could break above that. We see the trend is still bullish, and that 20 simple moving average is still sloping upward. So everything is still looking good for the Apple bulls, and it looks like they still want to drive the stock higher. We see we came right down to the 20 simple moving average and just below our 0.382 Fibonacci retracement level, which was also the gap close at $117. So it looks like this is going to be a strong support level for the Apple bulls, and it looks like they're starting to step back in and drive the price higher. Next up is Tesla, and we see Tesla had quite a bad day today, closing down over 2% to the downside and closing below its 20 simple moving average. So you can see the 20 simple moving average has been trading sideways, which tells us there's no medium-term bull trend on Tesla anymore, and the bulls are starting to get tired. Now, this isn't surprising because earnings is tomorrow, and there could just be a lot of buyers on the sideline waiting to see how earnings goes. So right now, I would say that earnings is a binary event for Tesla. It's either going to go really well or really bad, and we're going to see a drastic price move in either direction depending on how well earnings goes. So you can see here we're trading right at the Fibonacci retracement level of the 0.382, which should be a very critical support level for Tesla. And that's right around that $422 level. Now we could bounce off of that level and bounce off of this support trend line that we have. And if the bulls can take control after earnings and start driving the price higher, our price target remains at $503, which is a test of the previous all-time high. So if you're not already in Tesla, I would wait till after earnings unless you're a gambler and you want to bet to the upside or the downside. But it's completely binary at this point, and Tesla's already gone on a monster bull run, so there's not a lot of upside left if the earnings report is not absolutely amazing. Next up is Bitcoin, and we see the Bitcoin bulls still driving Bitcoin higher day after day with only minor cooldowns in between, and we are back up to our 12,000 resistance level, and it looks like the bulls are currently battling this resistance level, and we're waiting to see if the bulls can get a close above that level. If the bulls can close above 12,000, we could see a quick run up to 14,000 in a flash, but we need to wait, and we could see that there is a lot of volume coming into the bull side, and there's a lot of buyers stepping into Bitcoin at these price levels. So Bitcoin's still looking great, and you can see by the moving averages that the bullish trend is picking up momentum, and that 20 simple moving average is starting to break away from the 50 and creating more and more separation each day. So Bitcoin's still looking very bullish, and it looks like we're going to continue to see Bitcoin climb higher. So going back to the S&P 500, as you can see from the entire look at the stock market, everything is still in a bullish trend in the short term and the medium term, and the price action looks like we're just getting a minor cool off and a minor correction after we got overextended to the upside, and we were closing near very important resistance levels as well as breaking out above the upper Bollinger Band. So it's no surprise that we're seeing this cool off, and it has still not technically broken the bullish trend, and it looks like the bullish trend wants to resume very soon. So I'm still looking for the S&P 500 to break out of this resistance trend line and start heading higher to our upside price targets, and we should see one more test of that resistance trend line. And at that point, we will see if we're going to break right through that level and continue to head higher, or if we're going to finally get rejected for that last time and maybe put in a very important market top. So we're not going to speculate on what's going to happen. We're just going to follow the price action and follow the trends. And right now, we still have to say that the price action and the trends are still favoring to the bull side. So continue to watch these support levels. And as I said on SPY, if we do start closing below $341, we could start reversing this bullish trend. But right now, it looks like that level is holding up. And if we continue to bounce from here, we could see a lot more upside within the 4 to 5% range before our next resistance level. So please remember to help me out by smashing that like button. I really hope these videos are helping you out. And go ahead and subscribe to my channel if you haven't already so you can follow along with all of my daily updates. Thanks for watching, everybody. Good luck out there. And as always, I will see you in the next episode.